It is that time of year again, the dreaded tax season. But for many people, changes in their income and their employment status has led to new challenges. Here to give us some tax tips and to make sure that you file correctly and on time, we're joined today by John Hewitt, the founder and CEO of Liberty Tax Service. It was named the #3 franchise in America by Entrepreneur magazine. Hi, John. Thank you for joining us today.
Thank you for having me, Dalton.
Well, John, I don't need to tell you, it's a tough economic climate out there. We know a record number of people being laid off. Every time you open the newspapers, there are more jobs that are going. How does losing your job affect your tax return?
Well, first of all, there's one piece of good news is if you have less income, you're going to pay less taxes. But we need to warn taxpayers that if you've lost your job-seeking expenses are deductible, and many people forget that, and they don't keep track of them. I don't know, most people come in and say, well, I didn't keep track of that, so I don't want to put that on my return. Make sure you keep track of all your job-saving expenses, especially your automobile mileage. It can save you a lot of money.
Would that also take into consideration perhaps if you have to buy a new outfit for an interview, or if you're having to wine and dine and entertain prospective employers, or just your transportation?
It can be things like entertainment and dinners, but not new clothes.
All right. Now, another concern, of course, is foreclosures. What kind of impact does a foreclosure have on your tax return?
Obviously, another bad situation when your home is foreclosed. The good news is Congress recently passed a debt forgiveness, so that if your debt is forgiven on a personal property, you don't have to pay taxes on that amount that it's been forgiven. Previously, you did have to pay taxes on that. So that's going to benefit people that have to go through that ugly process of foreclosure.
And are there any kind of tax breaks that you should be trying to get as well? I mean, if you have a foreclosed property?
Just make sure to take advantage of all the property taxes and interest that you've paid. And there's a special one-time law that even if you don't itemize your deductions, you can take property taxes for the first time beginning in 2008.
And John, while we know that this isn't generally advised, many people have been forced to break into their 401 plans and their IRAs. What are the implications and, of course, the penalties if you've been forced to do this?
In addition to the amount you withdraw being taxable, you also have to pay a penalty of 10%. But keep in mind that in 2009, you can pay money into your 401k and IRA and deduct it for 2008 all the way through the due date of the tax return on April 15th. Sometimes you can put money in one day, deduct it in a high income year in 2008, pull it out, and actually save money by doing it the next day. So talk to your tax advisor if your income has dropped dramatically about contributing to a 401k or an IRA.
And is there any incentive to filing your taxes early, given that we are in this difficult economic environment? Is Uncle Sam going to give you some kind of break for that?
No, you're not going to get a break for filing early, but be sure a lot of people during recessions can't afford to pay taxes that they owe, and as a result they don't file. That's one of the biggest mistakes. It's a bigger penalty for late filing than late paying. And so even if you can't afford to pay the amount of your tax return, make sure to file. And you can get installment payments and avoid a 25% penalty just for late paying.